Don't get caught sleeping on these stocks. These are the long-term growth stocks to buy and hold for multi-bagger returns. Lithium Americas. Quality assets in US and Argentina was split into two businesses likely to unlock value. Pinterest. Ample scope for growth in average revenue per user in emerging markets, which will drive earnings before interest, taxes, depreciation, and amortization margin expansion. Tilray. Diversification towards alcohol and beverages business to boost growth and help in establishing a strong strategic infrastructure in the U.S. Let's dive in. Here are three more growth stocks to buy and hold through 2030. Welcome to Timely Investment Research. Without doubt, it's easier to buy and hold blue-chip stocks for the long term. The revenue and cash flow outlook are stable and dividends boost total returns. However, it's unlikely that blue-chip stocks will deliver 10x or 20x returns in 5 to 7 years. This is entirely possible with long-term growth stocks to buy. Of course, investors need to be very selective as the risk is high. It's also unnecessary that all suitable business models survive. Factors such as intense competition or extended industry headwinds can play spoilsport. However, if the stock selection is right, there is scope for massive value creation. My focus is on three long-term growth stocks to buy with the business likely to be supported by positive industry tailwinds. Through 2030, these stocks can deliver a minimum of 10x returns. I must add here that I had discussed three growth stocks to buy and hold through 2030 in May. I would add these growth stocks to that list of multi-bagger stocks. Let's discuss the company's specific reasons to be bullish. Number 1. Lithium Americas. Considering the expected lithium supply gap in the coming years, the metal is an attractive investment theme. Lithium Americas stock is attractive among long-term growth stocks to buy for multi-bagger returns. High-quality assets providing long-term cash flow visibility is the key reason to like Lithium Americas. To put things into perspective, the company's Thacker Pass project is likely to be a cash flow machine. The asset has an after-tax net present value of $5.7 billion and is likely to deliver an average annual earnings before interest, taxes, depreciation, and amortization of $1.1 billion. Further, the company has 44.8% stake in the Cauchery-Olaroz asset in Argentina. Phase 1 of the project has delivered first lithium in June 2023. Capacity at this stage should be 40,000 tons per annum of battery-quality lithium carbonate. Stage 2 should add another 20,000 tons per annum of lithium carbonate. The company has received shareholder approval for split of U.S. and Argentina assets into two entities. This is likely to unlock value. Number 2. Pinterest. Pinterest stock has gradually trended higher by 17% for year to date. Positive business developments have backed the uptrend, and I believe that Pinterest stock will be a value creator. For second quarter 2023, Pinterest reported revenue growth of 6% year-on-year basis. For the same period, earnings before interest, taxes, depreciation, and amortization growth was 16%. I believe that the company's earnings before interest, taxes, depreciation, and amortization growth and margin expansion is likely to remain strong. There are two reasons for this view. First, monthly active user growth for second quarter was encouraging at 8% with monthly active user growth in emerging markets at 10%. The company's average revenue per user in emerging markets increased from 10 cents to 12 cents. This is significantly lower as compared to the global average revenue per unit of $1.53. Even with stable monthly active user growth, an increase in average revenue per unit is likely to boost key margins. It's important to point out that Pinterest has focused on making the platform shipping friendly. With growth in monthly active user growth, I expect advertising revenue to support average revenue per unit growth. I also like the fact that Pinterest is investing heavily in research and development. Platform innovation is likely to boost user growth. Number 3. Tilray Brands. Tilray Brands stock has surged by 86% in the last 1 month. Two major news items have backed the rally from deeply oversold levels. I believe that Tilray is among the names in the cannabis industry that's positioned to survive and grow. In a recent news, Tilray announced an agreement to acquire 8 beer and beverage brands from Anheuser-Busch. This acquisition will position Tilray as the 5th largest craft beer brewer in the U.S. Further, with multiple acquisitions in the alcohol and beverage industry, the company has built a strong strategic infrastructure in the U.S. This is likely to help and boost cannabis on potential federal level legalization. Tilray has also been delivering positive news from a financial perspective. The company expects to report positive adjusted free cash flow in financial year 2024. Of course, with acquisitions, revenue growth is likely to accelerate. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.